I don't care what our restaurant bill is, and I don't care what the bottle of wine costs and things like that. Like those are some of the things that I like to splurge on. But I feel like in general, but when it comes to a house, I'm telling you, like I get freaked out by a big number. I don't know why. It's something to do in my head that like, well, I can afford more than what the number is. That's not the point. The point is that my brain doesn't like to think like that. I like to.
Are you sure it's not commitment?
No, because I own a house.
Yeah.
So like
You've owned the same house for a long time.
Yes. For 10 years now. That's not a commit. Wow, she's digging at me. Look
I thought I'd kind of liven up the conversation,
I like it.
Welcome to Stop Whining About Real Estate. Join us as we chat, sip, banter, and wine with the best in the biz. Grab a glass of your favorite vino, sit back, relax, and let's wine together. Welcome to our show today, Stop Whining About Real Estate. I am your host, Sarah Birnbaum. Alongside me is my co-host, Emmanuel St. Germain. And we have a very special guest today. She is the CEO of the Realtor Association for Broward, Palm Beaches, and St. Lucie County. Her name is Dionna Hall, and I'm so thrilled to have you because I've been working on this for months. So welcome.
Thank you. Excited to be here.
Yeah, I love having you here.
Very nice having you.
You're amongst two blonde women. Are you so excited?
So, it's funny. There's a lot of twos. There's a lot of pairsums here.
You didn't answer that question.
So, you believe barefoot you are taller than I am. If that's the case, you might both be taller than I am, which I don't think so. I think you and I are identical.
I do believe we've done this before, and we went back to back with most of our team watching. And I was a smidge taller than you.
Isn't it funny how history, depending on the perception, but no. Anyways, really nice to have you.
So you really think how tall are you?
I'm 5. I started my adult life at 5'10". I think I'm on my way down though.
Okay, I would say the same as myself. Yeah. And I just had myself measured. So
really,
yeah.
How tall are you?
5'10", but then I'm probably like a couple centimeters below that.
Yeah.
Now.
See,
I am getting older.
I always have said 5'10", but I think
you start adding in the halves.
I think I'm actually 5'9" and 3/4 barefoot.
1,000% you are.
It doesn't matter. Everybody rounds up, right?
If you're 5'10" and a girl, it matters.
Yeah, it does.
No, that's true. I get it.
Because then you add heels to us and we become 6 foot and now you're 5'9".
Yeah. I get it. Yeah. I get it.
Yeah. So anyway, welcome to the show. Ooh, I did that thing.
So we have this thing and where with guests and people it happened with, I forget which guest it was, but when you do this, like people will talk. So tell me where you're from. And like, you don't realize, but the sound on these mics, it picks up a lot. And so
Janine's like, I've got to edit
try not to use too many hand gestures.
Yeah, well, no, listen, I'm French. She's half French. So like we talk all the time.
Well, I'm German. So like you're going to get a lot of
beautiful.
Yeah.
Perfect. All right. So tell us a little bit about the journey. So right now, Dionna is the CEO of Our World. We've had the pleasure of having a wonderful partnership with you guys since what year? 2015?
It's probably been about 9-ish years now.
Been a long time. Feels like a really long time anyways. And so how did you get into real estate? How did you decide to go into, were you a realtor before going into the...
I wasn't. So I was a local lobbyist for the Realtor Association.
Okay.
And I had grown up in the area. I have seen a lot of development. My mom was a big community activist, really trying to help better plan growth in the Palm Beach County area. And I always thought it was very interesting. So when I went away to college, I kind of dabbled in urban planning, ended up with a finance and marketing degree, came back home. It was around September 11th and started meeting a lot of different politicians in the areas, people that were developing. Really didn't matter to me at the time because I really was kind of concentrating on doing something in the finance industry. But it ends up that my parents said, hey, take a step back and really look at what you love. And I said, I really love seeing our communities develop. I love that you can go to these meetings and learn so much and actually, have a part in shaping your local communities. And so I answered a newspaper, to date myself, a newspaper ad looking for basically a government affairs assistant for the Realtors Association. Wow. And back then we were the Realtors Association of the Palm Beaches, and I started there and climbed my way to the top.
Very cool. Yeah. So I do have a question, some CEO to CEO. What is it? Do you run? Is it run? So like there's many ways to run a company. Mm-hmm. So for ours, I do not run it at all like a dictator. It's very much, obviously at the end of the day, I can make any decision I want, but I don't act that way.
Correct.
And we have something that we use through our company called EOS. So like, in fact, tomorrow morning we have our leadership meeting, and every week everybody has a say in everything. And then you kind of, as long as each department is getting better, I consider myself more the general manager, the at the helm type thing. But everyone, just like any head coach,
You're the orchestrator.
yeah, sure. Like you need your offensive coordinator, you need your defensive coordinator. Everybody has to do their job. Otherwise, my job doesn't work either. What's it like running an organization? And well, all right. So I digress for 2 seconds. You got 43,000 realtors, right? All right. So those are members. How many employees are part of what you're running?
So we have 75 employees.
Okay, so it's still large.
Right. And I would say that in 8 offices, so I would say my approach is more collaborative.
Okay.
I think that's my personality type, but really that is the only way probably to scale the growth that we've had. So going back to what that growth looked like, I was with the Realtor Association of the Palm Beaches, and I was their CEO, and we had already done the merger with St. Lucie. And then about 1.5 years, 2 years later, we did the merger with Greater Fort Lauderdale. That ended up being the largest merger that the National Association of Realtors had ever seen before between 2 organizations.
That's fantastic.
Yeah, and so when you think about the National Association of Realtors being the largest trade organization, it really shows you how large that merger was. And so to be able to effectively bring those markets together on really multiple levels, right? It's not just the staff coming together and the processes and everything that goes into actually doing the day-to-day. It is a whole huge membership as well. And that membership was fragmented and had different ideas and ways of being a part of a Realtor Association. And so growing that, the only way we were able to really effectively move that forward was making sure that we were using many great minds, whether they were a staff professional or whether they were one of our leadership. And I think that's part of the reason why the culture of what we now dub, our world is so strong, because we allow so many people to be a part of that process and give their input. And to me, it's really the only way for us to be successful and keep those ideas churning. And, a lot of people at the time, especially since it was so large, and I was very young in my CEO career, thought it couldn't be done. And I really kind of give it up to surrounding myself with really great staff professionals and leadership. And we're very blessed that, as years have progressed, we continue to see really great leaders being able to just give their time willingly and come up with some really great ideas.
Love it.
Mm-hmm.
I think also one part, and you may or may not or know this, and I only know this because I went to Leadership Academy through the association. Along with the mergers comes the merging of the MLS, which are all on their own until they become one. And so one of the biggest pieces and one of the bigger lifts was merging all of that information together and making sure that everybody was kind of on the same page and really building that out. And there's huge task force and committees and a whole department that's just solely dedicated to that, to make sure that because that's really what the agents are buying into, right? They want to be a part of that and they want to have that extension. And so when you hear that, it just was the Palm Beaches, then with St. Lucie, Martin County is up there, but they're not a part of it. And then you've got Fort Lauderdale and now all of Broward. I mean, that was a huge kind of bringing everybody together. When you started, I believe it was like 22,000 members. And then
when I first started, it was probably around more like 12,000. And so it really has grown now to about 42,000 is where we're at right now.
And I think we're the third largest in the country?
Mm-hmm. We're the third largest realtor association,
which is
in the
huge.
country. Yes, it is.
In your merger, because we're going through one right now as we speak.
Oh.
What are some of if you were to give me advice as to both something we did great that I would recommend doing again, something that we kind of missed on, I wish we'd have done it this way. What's some advice that you can give me so that I can learn from you?
I think the best thing that we did was taking ourselves and inserting them in with the new staff and being their partners and giving our time to that group who was coming into the greater whole, getting a chance to get to know them so they felt like we were making decisions that were inclusive of their suggestions. The way we approached it was that there was a great opportunity for us to become better. I think we even like our tagline at the time was, better together. And that really was the case, because what I really wanted to know was what moves did you want to make, for so long, but you didn't because maybe somebody wasn't listening to you. You guys didn't have the resources. There's so many reasons for that. And then we took that all back and kind of create a plan. And then myself and the chief operating officer worked from that big main office for about 2 years. So they really felt like we were, the same group of people. What we didn't want to do is have this silo where it was, one association versus the other association. And I really have to give a lot of credit to our leaders as well, because they did such a great job assimilating to be the same. I think now more the Palm Beaches and Greater Fort Lauderdale in general, as like the public and citizens, they consider themselves a little bit more interchangeable. But, back 10 years ago, I think that those marketplaces seemed like they were very different. And I'm sure it's technology that's really kind of bridged that gap, and probably, the Bright Line and everything else with the transportation. But back then, if you would have said that you were going to either market, it really seemed like it was a different world. So to be able to put those cultures together effectively, I think it was because we really made sure that we took the time to get to know the people and what was important to them and what they were seeing, and make a plan where they all felt like they saw themselves in that plan, and move that forward.
Love it. And what do you think we missed on?
What did we miss on? I hate to say that I really can't think of anything at the moment. Things really, for whatever reason, continue to play well. We did not have to do. We decided to keep the staff for a period of time so they could feel like they proved themselves. And the people that seemed like they were not good fits, they quickly found themselves just saying like, "Hey, I think I'm going to move on." And so we really didn't have to do any of those really controversial. Awesome. It really was. And I think because it was more of a conversation with the staff.
It wasn't like a hard stop.
Exactly. It was just kind of, they saw that maybe they just weren't fitting into the new picture, and they found other positions. So I think that would have been something that was really difficult. Scaling the distance is very difficult. Realtor associations, we talk a lot about being very localized.
Driving from top to bottom for you is not easy.
Yep. And trying to offer the members more. As Sarah said, I'm actually the CEO of 2 companies. We have the Realtors Association side, which is a nonprofit, but the MLS is for-profit, and they both have their own separate board of directors. And what I thought also worked was that we did not decide to just say this is what we decided at the time of merger as far as governance models. It was very evolving and flexible. And so every year we just made tweaks to kind of make it better. So that was another thing that really worked well for us.
I think that's a huge piece. And also when you talk about like being inclusive, because there's mergers that happen where companies just kind of come in like a bulldozer and they're like, here's what we are, here's what we're doing. Everybody that's not on board, see ya. And like they kind of just, they come in almost like a big bully. Mm-hmm. And I think that doesn't work, and it rubs people the wrong way. And there might be people in that merger that you are gems and you really would love to have had them, but you didn't even give it a chance. And when you make it feel like this is something that we're doing all together for the greater good and, to really grow. And like you said, like, what's something that you wanted to do that you maybe didn't have access to, or, there wasn't the ability to go do it, or there wasn't the channel or the avenue for that. That I think is huge, because then it offers people that, they don't have a choice in the merger. It's somebody else above them that did. All of a sudden now they have, kind of a light that goes, oh, wait a minute, I have new opportunity. I have new avenues that I can explore and take my career to places that I didn't even think were, for me, unless I left, which I think is really refreshing and nice.
I think that also allowed what we talked about with the staff was that it allowed them to do more of the things that they really wanted to do. When you are a part of a smaller staff, you really, are doing everything. And we still do everything, of course, especially being a membership organization. But they were really able to focus in on their main, forte of what they like doing, instead of having to do all these other things and be pulled in other directions. So that also gave our staff a more professional level, mm-hmm. which helped really elevate our organization. So now our members were not just working with people who
do a little bit of everything.
Exactly. They were specialized. Exactly.
Yeah.
Mm-hmm.
I love that.
Now, so obviously I know you're very localized, but I'm going to bring up a story that's more on a nationalized level, which is, so one of the challenges that we are having that I did not foresee is getting these loan officers that are in a different state out west in New Mexico. And their contracts are very different than our contracts, the FAR bar here. Their financing contingency is not at all like ours. It's not really a negotiable number. It's basically 3 days before closing type thing. And what I've found is that for us, our a major value prop that we have, which is locally, we talk about speed. And in order for us to do our job properly, I need all of your documentation so that I can get your pre-approval letter so that you can do a 7-day or a 10-day financing contingency. And as a smaller company, that's my advantage compared to the big banks. Mm-hmm. In the New Mexico market, we're trying to figure out what is that, what is going to be my value prop in order to get, because at the end of the day, when I'm asking you to do something, it's for both of us. I'm doing it so you don't waste your time, your agent doesn't waste your time, I don't waste my time. At the same token, like the way that our business model works is I want your application, I want all your documents so that when I tell someone you're good to go, this is a done deal. Their world doesn't work like that. They're looking at credit, they're doing it what we would call in the old ways of half-assed before everyone around here, for the most part, that I know, basically does it the way that I do in terms of all the cross countries, like all of us that are in the same world. And I've found it unique that I know it's naive of me, but each state is so different because our contracts are all different. Why? If NAR was trying to, if you're making I don't really want to talk about the commission stuff. I think it's boring, but like if you're trying to make one universal thing there, why not make a universal contract? Wouldn't that be the most simplest? So
but there's
whether
not even
you're from New York and you're
locally.
What's that?
There's not even universal contracts locally, I don't think.
Perfect. So
I think it's different state laws, right? I mean, there's so many things that are different with states, and obviously laws are one of those things. So now you're kind of bringing it down to like a form, and those forms are probably based off of, I'm sure, like state law.
Right.
And so the ability to get those states on parity. Not only would it be difficult, but I don't think they want to be on parity, right?
No, they
because
probably don't.
It's. I mean, you see people now, right? I mean, supposedly they're migrating to different states that they, politically connect with, right? So they don't want their governments maybe.
Sarah just applied to go to Canada.
Yeah, well, congratulations.
I'm going to go live with your family.
She wants to be tariffed.
Jesus.
Sounds like an interesting inside story.
Yeah.
So I think even though it's frustrating, I can see, especially with a lobbyist background, that I would probably think that that's not going to happen.
I really like. And I'm sure it's not. I like our FAR bar. I think the FAR bar is really easy. It spells it out. Mm-hmm. Like, I am surprised a lot of more realtors don't understand their own contract better, but I think the FAR bar is really. I don't know who wrote it, but whoever spelled it out, like
Ben Schachter. I'm just kidding.
Yeah, I think it's a collaboration between the bar, the Florida bar, and then the realtors, the Florida realtors, right? Yeah,
realtors. Yeah. Mm-hmm. Oh, very cool. So, anyways, my thought process though was, how do you find? What's the value process, or what's your value prop when you're going out to other markets, and trying to find that has been more of a unique challenge than I thought. Mm-hmm. To try and so from a culture standpoint, we know the way we do it is by far better. We know it's more efficient. We know it will drive better results. It's less costly. It's more profitable because we're closing in faster time. It has less underwriting touches. Like, as a business person, you're like, this is way better. Why would anyone do it any other way? And then you're like, well, they've always done it this other way. Now we have to break those bad habits and retrain them. But they're so used to doing it one way, and their agents are used to, hey, this person wants to make an offer today, pre-approve them now. I'm like, for me, I'm like, I don't know what kind of commodity you think this is, but
have you ever spent significant time in that state?
No, I haven't.
I think that would really change things, right? Is kind of
get the lay of the land, and also understand what the competition does.
Yeah,
I mean, that's
understanding where they're coming from, right? And I think also people are more open to change when they see that. Quite frankly, you're willing to put yourself out there to really kind of make sure that you're
Sarah out there.
Yeah, I'm just speaking from experience. What can I say?
I mean, well, in sales, right? Because you're selling an idea, you're selling a system, an organization. You always have to find out. And I mean, you've told me this, but I knew this before.
Sarah wants to move.
I don't want to move, but I will go out there for some time. I like getting on planes. What's important to them? Speed might not be the important piece to them. Just like, to our Texas loan officers, condos are not
speed is the important piece, but it's not speed of getting a loan done. What they want is they want a pre-approval letter and they want it done fast. But like for us, we locally made a business decision a long, long time ago that for me giving you a pre-approval letter and then not being able to close the loan is way worse for my reputation. I rather say it's going to take me 24 hours, do it right, but then no one's ever said oh, Emmanuel didn't close that loan. Like, so it's just it's a
mindset.
It is a mindset, but I feel like our market works the right way for the most part. And
have you ever been able to really kind of lay out to those? Yeah, exactly.
They all know.
Like understanding maybe
them.
that's saving the time, the money.
The loan officers like it. Their referral partners haven't been trained yet. And so they're like, we've been doing it this way for years. We have to slow. I was just shocked that no one else has done this. Like from submitting a loan to getting it clear to close, they're like, that's the fastest we've ever had. And that was so easy, and I didn't get pulled in. I'm like, yeah, because if you do everything right up front, the rest of it's really easy. Whereas it's the same thing. It happens even amongst other lenders, they do dumb things along the way that they have their post-closing nightmares where it will take them 21 days to sell a loan where it's taking us 8. That's because we have more checks and balances along the way and we're doing things the way we're supposed to so that we reduce our costs. Like all of it is just common sense, but some people just don't seem to, understand how to put the pieces in or whatever it is. But
well, it depends on who are these people. Like, are they the people that actually are servicing the loan? Are they the actual consumer who wants the approval process?
The middleman is the agent in between.
No, it's the agent. Consumers don't know any different. Consumers only know what their agent's telling. So if the agent is setting up the consumer and the loan officer, they're setting them up for failure because they said, oh, Sarah can jump on this right now and she'll stop what she's doing on a Saturday afternoon or on a Sunday and write you a pre-approval. Okay, that happens. That happens on a relationship when you have a relationship with someone.
That's how I sell you, by the way.
What's that? That I'll do whatever it takes?
Yeah.
Maybe you incentivize the part of the loan, actually, how quickly it's closing after that pre-approval, because if that's what you're really trying to get to, right? Within 8 days or
sell the benefit of doing it all up front.
Yeah, like your percentage increases like when this. And so, hey,
if I do this, we will close. We will not have problems at the end.
Which means more money. Well,
no, I get it.
Which maybe means
but
more
there's no
money
repercussion on it. So like the reason it's so easy to get the agents on board is that for us, financing contingency is a big deal. And when you are making an offer on a house, if you're able to put 7 to 10 days financing and Janine has to put 30 days because bank whatever isn't faster than that, you're getting the deal all day long. Like it's just how it is in our market. In their market, if they don't have a financing contingency, it's just what's the difference? It's either you put fast closing dates, which isn't necessarily something a lot of sellers want anyways. That's very rare. Maybe in this market because we're more transient, but in that market, they're not. So, to your point, you're right. I don't know my audience, so I don't know how to sell to them. I don't know how to solve their problems.
And maybe it's making it matter to the consumer, which will maybe also make it matter to the person who's servicing them. Money and the consumer. I have an idea. Maybe we'll do that. Maybe we'll do a credit. Maybe we'll do a credit if you do it right. Because to me, it sounds like the service that you're offering is really a service that somebody's going to find value in that has already done a transaction before. Let's just say like a person buying a home for the first time, they might not really understand how important it is. Like they're really looking at the amount of money it is to get into the house, right? And the interest rate next, but they're not really looking at the fact on their
deal. It's not even the rate. They want the payment, but yes.
Yeah. But they're not really looking at the fact that they're putting now also as another number on there that's going to take them longer to possibly close or not get the deal because of it. It's when you have now gone to your second house and you start realizing realizing that, oh, there's other things to this, process that matter when somebody's considering, if they're going to, accept my offer on a home. And so maybe there's something like that where you're kind of, showing that your value proposition is really a higher level of consumer and makes you a higher level.
You gave me some ideas.
Also, but the other thing is they might not have the competition that we have down here with offers on houses. So they might not need that extra leg up on other offers because it might not be like that. They might have more inventory. They might have people that are, a little bit more not as chomping at the bit to get into the house. And so it's not as cutthroat. So it might not be that. They might have another pain point that you need to go spend some time in New Mexico and solve. Or I'll go out there for you and
Get
I'll
your
take
sunscreen.
notes. I'll take notes. So one thing I want to say, because we're talking very much about the transaction, you guys were actually in some sort of transaction together where you worked together for moments. I got the text from Dionna. And I was like, oh, fun. The CEO of the Realtor Association wants to use us. This is amazing.
Yeah. And you know what? And one of the reasons why is, well, besides the relationship, which, made that really the reason why I initially called you. But as I was in the transaction, I really realized, because I was in pretty much a bidding war for this house, how important it was, some of these other things and services that you guys offer, as far as the fact that you're a hard money lender and that, obviously, having you back, the financing of this house made it such a stronger offer than, being with a different partner. And so that's why I say that, that is really a huge selling point. But a lot of times somebody won't really probably understand that their first time around on a transaction. So,
no.
But yeah, I actually live in a wonderful home and I plan on staying there forever. And there was one house in my neighborhood that it was my favorite house. And my house is my second favorite house I live in. And it was just kind of like
her house has
I love
feelings.
my house. I really didn't plan on moving. Even though it was down the street, so don't worry, it wasn't too far. But I thought, if this house ever goes on the marketplace, it's really something that I, really would have to seriously look into. And so I was going for a walk around my neighborhood, which quite frankly, I don't usually do. And I saw that the realtor was already putting up the sign in the yard. And I didn't even know it was for sale yet. They were just getting ready to put it into the MLS. And so right away, it was like that big, kind of run home and tell your husband, convince him, we just hear me out, and he's just we just done a renovation on the inside of our house. So moving, he has said that he will never do again. And so right away, I knew I needed some type of pre-approval. And, I obviously contacted Sarah through your deep relationships. Yep. Mm-hmm. And then I got you, which was so cool. I was like, wow, I get the big dog of the company. That's so cool. So
I wasn't going to put you with the new guy.
Yeah. I was just, so I will say that this was basically something that had to be put together over the weekend. I think I saw it on a Thursday night, and by Friday morning they were like, hey, we're already, accepting, final and best pretty much. So you were there the whole entire time. And as the price rose, I had to keep calling you and being like, am I stretching myself too, high? And, you were able to give me that good counsel. And, at the end of the day, the reason why I really kind of lost out on it was because it was a cash buyer. It had nothing to do with, anything else. But it was really cool to, first of all, be able to work with you all and then really understand more of how important that financing piece is. And that, being able to say that you can obviously get financing in such a shorter window than somebody else. Because I do know I was one of the more final offers in that possible transaction. And then I got an opportunity to work through the new settlement rules as well. And so that was pretty interesting to just be a normal consumer where people didn't really know who I was. And I was impressed. This was pretty close to after I think the settlement went into effect. And so, yeah, it was actually in October. And I have to say that people were doing what they were supposed to do, and they really maneuvered it well. And so I'm like, okay, we're going to be okay. Yeah, everybody was still, commissions were still being paid, and people were, following the rules and getting things signed. And I was quite proud that day.
That's awesome.
I haven't really seen it be
an issue.
Forget an issue. I think other than one or two transactions, in general, almost all the time there's balance, and it's gotten to a point we had, and rightly so, we did it the right way. We had planned, we had started off, we were asking everybody, and now we're at a point where it hasn't. I don't even think I even ask anymore. Like if it's on the CD, like it's up to the consumer to know whether what they've signed and what they've agreed to, and from the moment of everything that's happening, I haven't seen one bit other than very early on. I saw one transaction, and the client was mad at the agent, but I just got his disclosures, and he's buying a house for his son with us, so had nothing to do with us, but just that concept of. I didn't realize
Lack of
that
communication.
you're charging me X and I'm the other person is only paying Y. I have to make that difference up.
Yeah. I think just if you have ever bought a home in your life, you've never signed a buyer rep agreement, right? And so then all of a sudden, having it required to go see homes, I'm sure the consumer thought it was like a bait and switch, right? Oh, great, you're trying to lock me into your services, and I have to decide already what I'm going to pay you, and quite frankly, I don't even know if I'm really going to buy a house yet. So obviously, there was a lot of mistrust, I think, when that originally started out, but consumers caught along very quickly. It's one of the reasons why we decided we run a local consumer campaign, Only a Realtor. And so this commercial that we just released about a month ago, it talks about, having a buyer, agreement, because we want the consumer to get used to hearing those words and socialize that word. So, when their realtor does mention that term, they realize that this is just part of, the process, right? And this is not something that's unusual. So, and I think, as you said, it really just seems that people have really caught on that this is part of the process and they've moved forward.
What do you think? So they're calling it the Trump bump is one term I've heard it. We are already very busy. This is a busier January and February than normal.
Interest rates are still
haven't gone down.
Right.
So, it's not a rate. There's no benefit from a rate standpoint, although the market today is doing well. But in general, what do you think? And I've always said that our South Florida market is just very different. We have our migration patterns and our lack of ability to continue to build west, right? We just, there's only so much land, so there's only so much building. So it's either going to extract north or south. Well, south, there's nothing either. So what do you think is going to happen in 2025? And then what's 5 years from now, what's real estate look like down here?
Yeah. Well, I would say, is it a Trump bump? I think we all know that during elections, it's obviously.
And I mean that in a non-political way. It's just what they're calling it right now because you have a new president.
Right.
But.
So it's just political uncertainty, right? Which nobody wants to make a move either way. So now we know who is going to be in office. I would say maybe in Florida, they are viewing, since so many people did vote for the Republican candidate, who's now our president, that they saw that as a positive thing. So that would make sense that, the voters who obviously want to see that person in office are feeling more optimistic about, the marketplace and the economy and what's going to be happening. And I think that when the administration changed over and they saw that interest rates weren't immediately going down, people that need to move on with their life for whatever reason, we're like, look,
all right, let's do it.
We got to just take this mortgage rate, accept it, and move on with our life. And so I think that there was that pent up demand where people were kind of waiting to see, maybe there's a possibility of the interest rates going down when the administration changes. Right now, it doesn't look like it. What do I see, in this year is I think we're going to have probably more of the same of what we're seeing right now, which is I don't think interest rates are going to go down, very much from what we understand. There's not too much of a reason for them to go down because obviously there's the economy is still doing very well, even though, eggs are expensive. That's not because of the economy. It's because of the, obviously a lot of birds dying who produce those eggs. So I think that I think you're going to see more activity. I don't think it's going to be a bunch more activity because I just think that people were just waiting on the sidelines to see what was going to happen. And I think it's just natural that people are going to have to move. I mean, in my house I currently live in, I have a really great, interest rate. And because I love that house so much, I was willing to move and give up my great interest rate to go to this other house. And I think that's
got to be a great house.
Yeah. And when I think about my mentality, and I kind of know what I'm doing in this, type of real estate world. I think about like your normal consumer and what they're thinking, which is, hey, listen, it's about heart, it's about timing and what's going on in their life. And that's really what's going to rule at the end of the day. And, maybe it ends up that they are not going to buy as large of a house, but they are still probably going to move forward buying something. There's obviously a lot more inventory on the marketplace, but even with there being a lot more inventory, everything's a lot when you get down to, 1.5 months that we were out of inventory, like about 6 months ago.
So anything is a plus.
We can be at like 4 or 5 months of inventory, and it's all really about how you position those headlines.
But isn't
right?
a normal market like 8 months? What do they consider average or normal?
I thought it was about like 5 to 6 months of inventory. Okay. Yeah. So, and so I was actually just at, there's something called Inman, New York. Inman is a news source for really the whole industry, not just real estate, but obviously we have mortgage and everything else that is very interested in the things that they discuss. And so one of their, I don't really know if he's an economist, but he's really the one that's being followed a lot. It's Del Prete, because he's very neutral on what his reporting is on the marketplace. And so he really went through a segment of talking about it's how you position these words. Like he gave us a graph and he said, okay, like, look, this graph looks like, they're doing horrible. And it was because it was like maybe like over like a 2-month span. Okay, well, now let's look at a 2-year span, right? I mean, actually, this is really great. And so that's kind of really what it comes down to. I think when you're looking at like the amount of people who are buying homes, we're really kind of in more of a normal marketplace. It's just that things exploded right after the pandemic. Mm-hmm. And we just saw an unprecedented growth for a lot of different reasons. And so now we're returning back to where that was before. And, some things are going to shake out there.
Yeah, I think a lot of people want it to go back to that little micro moment in time, and they tend to forget that that's not really how it was for most of history when we had, all of this. And then you remind them and they go, oh, well, I guess you're right. Yeah. And, when people look at me and they're like, when is it going to go back down to the 2s? I'm like, it's not. Probably
but that's
never.
the rate piece. But I think the difference
even just
is,
like the intensity
of
it.
Right, but where the problem is today is that
instability.
It's not that. It's interest rates. Yes, it's fine that they've gone back to pre-COVID levels and they were around the same areas in the 6s and things like that. That wasn't the issue. The difference is the $2 million house today was $750,000 before COVID. So yes, you're whereas now not only are you paying $2 million, but you're paying $2 million with a 7% rate, mm-hmm. as opposed to $750 with a 7, or use whatever numbers you want. 7, yeah. It's a huge difference. Where I see, where I have a hard time, either culturally we will just simply adjust, because from a loan perspective, the guidelines have never changed. Your debt to income, just call it 50%, has to be under 50%. Either we'll make adjustments and that will get looser, and you'll go to 55%. At some point, people aren't making more money, right? So if we're not making more money, like inflation has to stop somewhere. We're not going to keep paying higher goods. You're going to stop. And when you stop, you hit a wall and then things go down fast. But it's not real estate that's going to go down, it's jobs. And so everything that I hear from all the economists is the only way rates are going down is either if they get a budget that is better than balanced, but they have cuts so that now there's confidence in the U.S. economy again, that would reduce rates. The other area that I've heard where rates would go down is if the jobs breaks. If all of a sudden, unemployment starts to go up. I know that this morning the market went down because job openings went down significantly compared to what they anticipated. So we'll see, but it's a tough time talking to people, and they're like, they don't make that much money. And I'm like, yeah, it's going to be about a $4,500 a month payment. And, to a lot of people, they're like, whoa.
It's a lot of money.
It's a lot of money. I think one of the other really interesting thing is how the younger generation has these side hustles. And
yeah.
so it really actually has pumped up their ability. Like, for instance, and
Sarah's OnlyFans has gotten her this amazing house. I'm just
If I
kidding.
had OnlyFans, I wouldn't be sitting here. I'd be on a boat somewhere.
but
That's what you meant by side hustle, right?
no, just I don't know what I'm walking into. So.
No, just
We'll keep
kidding.
that there. But these memes about how people that are obviously coming into the home buying years aren't able to afford a home, and then the people that have a home say, yeah, but I wasn't getting my nails done, like riding in a car that was only a year old, and naming all these things that is like a normal social status of that younger group. But what we're also seeing is that they're willing to work that side hustle job in order to get that extra income. So it is kind of interesting to see maybe like as they get a little bit older and they put aside maybe some of these things that are probably not as important in the grand scheme of life, like manicures and blah, blah, blah. I mean, geez, people getting extensions. Obviously, I have none, but
you can afford them.
But if they took that money and they were able to put that together, is that like enough money for them to start subsidizing maybe that gap in owning a home? I mean, especially if they have a significant other as well. So I think homes are obviously still like really probably way too expensive in order to do that, but they just seem more resourceful and non-traditional at the way that they're looking at their income level. And so I think that's like a very interesting thing to watch. They didn't just like take their ball and go home, right? They said, all right,
where can we go play?
Leverage it, right? Yeah. How am I leveraging my and it's interesting. It's something that I don't do. I kind of wish I was as resourceful as that generation, but I think it's really interesting. I have lots of friends that do that.
It's been a really long time since I've had a budget, and I don't mean that in the way that it sounds. I know when I'm spending too much, I cut it back, but I've never been like a big spender like that, I like to live a modest life. I don't care what our restaurant bill is, and I don't care what the bottle of wine costs and things like that. Like those are some of the things that I like to splurge on. But I feel like in general, but when it comes to a house, I'm telling you, like I get freaked out by a big number. I don't know why. It's something to do in my head that like, well, I can afford more than what the number is. That's not the point. The point is that my brain doesn't like to think like that. I like to.
Are you sure it's not commitment?
No, because I own a house.
Yeah.
So like
You've owned the same house for a long time.
Yes. Yes. For 10 years now. That's not a commit. Wow, she's digging at me. Look
I thought I'd kind of liven up the conversation,
I like it. All right, let's go with, so I have one more question, then I don't know if you have anything else, but I want to know, what do you think AI does to your portion of the industry, the real estate part, the realtor part?
Yeah, I think it really helps leverage, especially the agent, right, on what they're doing every single day. Agents have different attributes that might make them really a great top selling agent. And so by using AI, a lot of times they can leverage AI to do the things that maybe they're not so good at, right? So a lot of times really great agents can be really wonderful people persons.
Yeah,
like
people.
that. Yeah.
People person.
Are we having a blonde moment here? I don't know, maybe, but I can't think.
A people
about it.
person.
Yes, that's it. Thank you. But they're so a lot of times when
They
people
are human.
but maybe they're not really great at managing maybe some of the day-to-day or the
operational
contacts
piece
that are coming in or what have you. So I think that, being able to, some of these programs that are coming out and leveraging them really will help a lot. I think obviously teams, it really kind of helps obviously, organize them and maybe quite frankly, your team doesn't have to be centered around administration as much as it would be or administrative work because of the fact that you can somehow, leverage that. And then the brokerage world, I mean, the sky's really the limit. Everything from lead generation to organizing themselves better, being able to see production, it's, things that I will probably not even ever think of that, are places that we are going to go. But I will say that the MLS is starting to incorporate a lot more AI. We are undergoing a process right now where we are going to have one back-end database system. And because we are creating it right now, we're able to really build in a lot of the newer technology that will let us take advantage of some of the cool things out there. And so one of them is AI. Like, for example, compliance on homes, which is like, people breaking the rules and not putting in the correct data. And so we'll be able to use some of the different programs out there that deal with AI to make sure that the correct information is going in there. And that's one of the ways that the MLS stays so powerful, is being the true source of information that is correct, because there's so many places out there on the internet where the information is not correct. So that is a huge value proposition for agents to continue to use that source that they can, rely on, and obviously make sure that they're fully representing their consumer.
Sarah,
Yes.
it just happened again.
Oh boy, he's got a new idea.
She had a great idea. Listen to this one. This is amazing.
To my life.
You inspired this, Dee. All right. So
He's going to call it the Dionna idea.
no. All right. You take the MLS, and so you know how like Amazon and all these other people, they have all these predictive analytics based on our shopping experiences that they bring products to us. What if somehow you can find out everything about me, so MLS only sends me the listings that before I even, you know what I mean? Like the whole concept of what they're trying to do with all these predictive stuff is they know they're guessing when you're going to have children. They're guessing when, so it's Amazon, it's all these gigantic companies
Saks gets me all the time.
They're doing all of this in the
All
background.
the time, Saks.
I'm telling you, think about it.
You should like this dress. All of a sudden, I'm like, oh, I do like that dress.
Someone is going to do that with the MLS, and all of a sudden you're going to get fed, look at this house.
Mm-hmm. And I think that is really where it's going. And I think the portals are already on top of that as well. I mean,
So it's not a new idea.
We're able to do that with our shopping experiences. So, I mean, for like you said, a dress. So why would we not be able to do that with our homes, right? So
I will say, though, from just the user-friendly part of it, as a consumer, if you go onto Zillow, if you're looking for a house and you go on Zillow or Realtor, any of them, there's often times where you go and you fall in love with something and you love like everything about it, and then you call the agent and they're like, oh yeah, no, it's sold 4 months ago. It's no longer listed, whatever the case. And you're like, then why is it still here? Take it down. Like the information is not accurate. Even with rentals, like I was a renter for a very long time. I've bought my first house a couple years ago, and like I would use the same Zillow, Realtor.com, all of those things for it. And when the information was incorrect, it was just like, so then what am I looking? Why am I even spending my time doing this? So if it can pull that and make sure that it's always constantly like updating the proper information, that's huge.
Yeah. A while ago, this was a much bigger problem in our marketplace, and we were able to change the status of the way that we were naming certain things. So things kind of didn't get caught in that in between. And then we did a major purge of the database in order to do that. So part of the MLS is really trying to keep that data clean. Not all MLSs do that. But yes, that is very frustrating, and it makes the realtor look very unprofessional when they don't know the homes that are for sale or that have already sold. So, yeah.
All right. And so I don't know if I understood this. So this is clarification for me. So I know you're CEO of Our World, and then which I didn't know you answered was a nonprofit. Mm-hmm. And then the MLS is a separate entity. It's a different EIN.
Yes.
And you're CEO for that as well?
Yes.
And that's a private company.
It is, yes.
Each is MLS. So it's the one that all of us use.
It's so the MLS is wholly owned by the Realtor Association. So usually MLSs are
so you're private, but you're owned by a nonprofit.
Yes.
Got it. Okay.
Which is usually the model of most Realtor Associations. MLSs have different models. Like they can be a regional MLS, which means like usually a lot of Realtor Associations own them. Luckily, we wholly own that MLS, so we're able to make changes like constantly in real time that matter to the member and the consumer. And then we represent a huge marketplace, which basically allows us to give consistency throughout that marketplace. Because being the third largest, we have associations and MLSs that are under 500. We have some in the state of Florida that are like 50. And so what type of marketplace is that really, for that member or subscriber, they have to, really make sure that they are a part of other marketplaces in order to really have a good area to transact in. And that was a big part of the merger, is being able to seamlessly connect all these marketplaces. So they just need to have one membership. They need like one data feed, which also means they're paying one fee. So there's a lot of really big benefits when we did that.
Cool. I get it. So agent contributes to membership, nonprofit, you get to charge the nonprofit over here a fair, profitable way. Got it. All right. Makes sense. I like it.
Yeah.
Do you have new ideas?
No. I just didn't know how. I never knew how that worked. I learned something today. So thank you very much. Yeah. That and Sarah's not quite 5'10".
Yeah. Yeah, by the time I usually get through like the whole name of the association, by the time I start talking about the MLS, people have already kind of, nodded off.
over.
So yeah, exactly. So
it's the back end of the business piece that I'm interested in. Like we don't have to talk about it on air, but like it's a whole different. So people think of a realtor and how that works, but the concept of what you do in the associations, you guys are so big for us, and I think because of our partnership with you, like I think of you guys as a really big influential piece. Is it like that everywhere in the country or no?
So I would say that we're different for two reasons. We've been able to marry being a really large organization, which gives a lot more resources to our members and opportunities for everybody that's a part of it, realtors, our affiliates, what have you. But also we are very member-centric, which was we actually in the South Florida marketplace are very competitive with our surrounding associations and MLSs. And because of that, it has kept prices like at a very, competitive level. It's really made sure that our services are honed. And so we run more like companies where I would think that probably around the country, they're more like Chamber of Commerce's, right? Yeah. They don't have that competition. They might be a little bit slow. I mean, we're like working, around the clock 24/7 for that person to really kind of drive that service so they continue to renew with us because they do have options. So it's very different. But on the Realtor Association side, I would say it's about member and community engagement. And then on the MLS side, it's really about technology and, data feeds and leveraging that side of the equation in real estate. So it is very two different animals. But when you can make them work harmoniously together, I think it's much more powerful than if you just had one or the other, because really they do go very hand in hand.
Absolutely. Anything else you want to add?
No, I'm good. I think we're good.
Well, thank you very much for being on the show.
You've
taught us all something today, and it was a pleasure to have you.
Yeah, good luck in your newest business venture. I look forward to hearing how you work this.
He's going to be spending a lot of time in New Mexico.
No. No. We got teams here. We can do everything up through teams. Jared will go to New Mexico. No, we've got a lot going on. So we are vesting. Really, I actually have some. I can't even discuss the names, but we've got some big stuff coming at the end of this month. I am trying to have by the end of the year to have a 400% growth from the end of last year.
Wonderful.
So trying to really, really grow. We feel like the market from our standpoint has been very flat. And so companies haven't made money in the last 2.5 years, which means a lot of people are sick and tired of not making money. So they're open to a lot more conversations than they ever have. And a lot of people, when you're not doing as many transactions, when you're not making as much money, business owners tend to go, all right, enough's enough. I've carried this lot for a while. Fire half these people so I can make my money again. And that tends to mean that the service that they're putting out there for all of their salespeople is really hindered. And so we are captivating and seizing the moment based on that. We decided not to do that. And so we've got our full team. And for us, we're saying, come home, we'll provide all the service there is. And our people are extremely well trained. And then we also have Sarah. So
yeah.
But yes.
The gem of us all.
Yes, she's
winning
the end
strategy.
closer, the winning strategy. But
Absolutely.
Thank you so much for being on, chatting with us. You're a gem. And
Dionna, I love that you taught him something today. It's my favorite thing.
It happens every day, Sarah.
I know. You just don't say it out loud.
course I do.
I appreciate that.
Cheers. Thank you.
Cheers.
Okay, that's enough whining for one day. We are so happy that you could join us today on Stop Whining About Real Estate. So please, not only listen, but subscribe, follow us, download, share, and if you're feeling it, give us a 5-star review. Hey, and if you'd like to be a guest on the show, please email stopwhining@choicemortgage.com. Thanks so much.